Alright guys, welcome back to another video. Today we're going to be breaking down my order block strategy, specifically going over how I find my order blocks, how I draw them, how they work, what is an order block exactly, all stuff to do with order blocks, because my strategy revolves mainly around order blocks, and they're literally the base foundation to how I use my strategy. The entries and stuff, they're not as important as what order blocks are, because all my entries revolve around the order blocks. If we don't know what order blocks is, the strategy is literally not going to work at all. Okay, so before we dive into finding these on the charts and whatever, first let me explain you what is an order block. So an order block is essentially just a price range where orders are filled to push price strong in one direction, ideally out of that price zone. Once we get that strong move out of a specific area, we're able to identify where that order block is, that price zone, and our goal is to get price to tap or to catch price tapping back into that order block or that price zone where orders are once filled to push price strong in one direction, in hopes that we can eventually catch a second move once price comes back into that original price zone. Because if we're able to push out of it once really strong and fill orders in one direction, we can catch it another time when it retraces back into that price zone, now that we've identified it, and catch a continuation and catch the entire next leg down or leg up. So another key aspect is usually an order block. Actually, here, I'll save that for actually when we draw out the entire how to find it. So now let's go over, based not on the chart yet, but let me give you a very simple diagram of what it is. So I have two types of order blocks. I have a regular order block and I have a retracement order block. First, we'll go over the regular order block and show you how that looks like. So let's say we have a move up. We're trending up. You guys know what an uptrend looks like. All right, we get to the highest point and then we change direction and then we start a downtrend. All right, let me move this out of the way actually so you don't see any charts. All right, so we have an uptrend, switch to a downtrend. Also, I want to add an order block is very important when we're paying attention to price changing structure. A change in structure may signify a big order block that's also been formed. Okay, in this case, we see a break of structure right over here. Right, imagine this was a low, and if you guys don't know what break of structure is yet, I'll form another video about that. But a break of structure basically just means a change in trend. So we had an uptrend, we broke the most recent low, and we formed a downtrend now. When we break the most recent low, that's when we can consider the trend switched into a downtrend, and we had a break in the structure, break in the trend. Okay, so now that we're in a downtrend, we've broken this low. We can figure out where our strong move was, and our strong move is a similar place where a lot of orders were filled. Okay, an order block is almost always formed where we have price change structure. So where did price change structure? Price change structure with this move down here that broke structure. So that move that broke structure, I consider as the place where a lot of orders get filled and cause a strong move, because it was strong enough to shift the structure and change the trend from uptrend to downtrend. So what I do is the entire order block or price range I consider is from the low that was broken all the way up to the highest point. If we're considering like a bearish order block, I consider the low from the most recent low that was broken that causes us to switch trends, all the way up to the highest point in order block or that price range that I mentioned in the beginning. So this entire area is my order block, and I mark it like this, order block. Okay, OB is just short for order block, and what I look for, like I mentioned, is price to break out. Once it breaks out, we're able to identify. We can't really identify it if there hasn't been a break of the most recent low. But once it breaks, now we've identified where our order block is. And our goal is to catch a retracement back into here so we can catch more orders that were probably left unfilled and catch all those orders getting filled and ride the wave down to the next low or whatever next target we want to go to. And on the way down, we set our take profits. Of course, we take profits and we cash the entire move. But I'm not going to get into all the take profits, entries, any of that stuff right now. I'm just marking out or showing you guys how I find order blocks, right? And yeah, leg down, break the low, retreat. We want to retreat. We want to catch the retracement back. It's always going to be the highest move before the trend switch, right? And we have to have a trend switch. The trend switch is what causes me to see an order block. We mark it from the highest move to the most recent low. Okay, catch this move. Our entry will be around here, and we catch this next leg down or whatever. Now, let's go look at this on the charts. So, I find my order blocks on the hourly time frame. Almost I don't use the 15-minute, 5-minute, 4-hour for finding order blocks. I found that the 1 hour has the highest probability for me on finding my order blocks and highest probability working order blocks. So, let's see. We have an uptrend, right? So we're forming higher highs and higher lows like this. Up, down, up. Trend switch. Retracement. Breakdown. Now let's break down this entire move. This is similar to the example I literally just showed you. So let's get rid of these lines. So uptrend, right? Where is the most recent low that we broke? We have a down candle and up candle that forms a low. And if you guys don't know, low is formed from a down candle and an up candle. We get any red candle we have, for me it's black, and green candle we get after forms a low because we went down, we had a bearish candle and a bullish candle. I consider that a low. That's what I've used and that's what's worked for me. So we grab the candle, we put our low point, our line to represent the low on the lowest wick. It doesn't matter which one's lower, we just put on whichever wick has the lower or has gone lower. Put our line over there, and that's gonna be the low point, the bottom point of our order block, like over here. See, this is our order block, the bottom point of the low. And the top point, what's the highest point? What's the highest point? The highest point is up here. And again, we couldn't have drawn this before this giant black candle because we know this is an order block because we've changed structure from this black candle closing below this low. That's when we're able to draw our order block because we know this is an area causing price to move strong in the down direction and change structure. So what we can expect is if price comes back into this zone, we're most likely going to fill some more orders that were left unfilled, and it's going to be a strong point of interest to continue price back down. Okay, so this is our order block. The highest point, the lowest point from the most recent low that was broken, and we look for an entry right here. This would be our entry. Whatever, I'm not showing you we're not going over exactly where we would enter. Let's say we got like our entry somewhere here, put our stops above here. We target whatever, any different areas based on what our TPs look like, what we look for TPs, and catch a banger trade. This might have been a banger trade, but we're not going to go over all the details. We're just going over order blocks. Now, let's go over different order blocks. For bullish order blocks, it's the same thing, just opposite. We're in a downtrend, get to the lowest point, break structure, come back, tap in, continue back up. What is our order block? Where did we break? We broke structure right here. We broke the most recent high. Last time it was low because we're looking for bearish plays. For bullish, it's the most recent high. Okay, this is the most recent high. Now, what is our order block going to be? Opposite of this. So we get the most recent high, the top of the most recent high, to the lowest point. Bro, this magnet. To the lowest point of the move. And that's our order block. Okay, that's our order block. Look for a price to break out. Once it breaks out, that's when we can draw our order block because we need it to break out before we can find it, before we can identify it. It breaks out, it retraces, it taps back in, get our entry down here and from based on our confluences, which we won't go over today. Catch the move up. Done. Just keep that actually. Move it out the way. Whatever, bro. You guys, we'll go over it in detail as you draw. But let's go over more order blocks. So let's see if we can find any. All right. Here we go. We're in an uptrend, right? This closed above the most recent high. Okay. Actually, this might have not been a good play, but it worked. So we closed. We're bullish. We broke structure, but doesn't matter. We switched the trend right after. This is our order block now. Our order block. The most recent high that was broken. See? We broke it right here with this giant candle. We had a strong move out. Especially if you have a strong move out, that shows us a very valid order block. Has a higher probability of working than compared to one that was formed from like a weak move out. So this is going to be our order block. The most recent high all the way to the lowest point, right before the trend switch. Tap back into that, retrace back, catch our entry down here, ride the move up. And again, we don't take, and by the way, we don't take plays just off of order blocks. We have extra confluences because if we just took it off of order blocks, we'd most likely have a negative win rate. Right over here. In a downtrend, all right, most recent high, remember, green candle, black candle. It's the high right here. Get that. All the way to the lowest point. Drag it out. Doesn't matter if we move. Well, actually, it didn't move up, but here's the high, here's the low. Broke out. Really strong. Not as strong as the other one, but strong enough. Tap back into it. Just barely tap back into it. Picked up orders. Rolled the wave up. Look at that. Giant move right after. Perfect. Let's see. Anywhere else? Let's see if we can find a bearish one. But we're only uptrending, so it's kind of difficult. I think this might have been one. Maybe right here. All right. This wasn't a crazy move, but you could have caught the low over here. But let's go over. So we're in a downtrend. See, we broke structure over here from this low. We didn't flip afterwards. This was the low. We broke structure. We never broke up afterwards. Right? So we're bearish. But we broke structure back to the upside with these ginormous candles. Right? Look at this strong move. All right. What was the order block or price range that caused these orders to get filled? That led up to these orders getting filled? Right here. This is the low. Price broke out. Consolidated a little bit. Tap back into that. Maybe got our entry around this area. Probably got a nice little trade up here. Not as big as the other ones, but we most likely would have hit all our TPs because our trades are not on the 4 hour or 1 hour. It's on the lower time frames. Okay. You see how that works. Now, I also have, you don't really get too many order block plays. So I wanted to work on a strategy that would be able to get us more plays and maintain our high win rate. So I implemented retracement order blocks. So retracement order blocks are similar to order blocks, but they don't really switch the trend. They're kind of like a continuation in the same trend. But they're still considered an order block because they're a price range that causes price to pick up more orders and continue in the original direction. And that's a nice play that we can also make some extra bread off of. So I didn't really draw too well on this one, but I'll draw right here. So we have an uptrend like this. Okay. What I consider a retracement order block, you can kind of already tell. But if you don't, it's just going to be the retracement where we want to see where price was able to switch the tiny trend, the short-term trend, and continue back in the original trend. I consider that a retracement order block. I look for price. Here, let's draw it out with the rectangle. I look for price to come tap back into the rectangle or the retracement order block, pick up more orders, and continue back in the original direction. And then same thing with this high. This is going to be my next retracement order block right here. Price comes back in, picks up more orders because it was able to continue, pick up orders, continue back in the original trend, break the previous high, and we want to see a retracement back into here, pick up more orders, and continue. Okay, this one is not as good. Of course, it's not my favorable setup. My most favorable setup is order blocks, but don't get me wrong, the retracement order blocks are insane. I've been getting banger plays on it recently, but let's literally go way further back in time. Retracement order blocks, right here, for example, perfect. In a downtrend, okay, like we said, for example, a downtrend, it would look like this: down, up, down, up, down, up. Continue, leg down. All right, the retracements are going to be these. This, this, tap back in, continue, tap back in, continue. It doesn't have to be exactly back to back. The order block is there as long as our bias is in place. And I won't go over bias today, but it's not that complicated. I'll just explain to you guys. My bias is determined from the structure of the 4-hour and the hourly time frames. Okay, if the 4-hour and 1 hour are both bearish, I have that. It's an amazing setup, but the 4-hour time frame is what determines my bias. I know I don't draw my order blocks on the 4-hour, but I know that whatever the bias or whatever the structure is for the 4-hour, my play is most likely going to be on that same trend. Okay. Oh, where did we go? No idea where we went. All right. So right here, bearish trend. The up moves are going to be the retracement. All right, let me draw that again just to make sure. You guys, up moves are the retracement. This retracement, retracement. This would have been the retracement on the leg down. Okay. This is the retracement. Grab the low point to the high point. Retracement. This is the retracement. This is the retracement as well. But see, we broke this. Wouldn't have worked. This one, tapped in here, continue the trend down. As long as the 4-hour is bearish, these would have been valid plays to this would have been a valid play to enter off of. Okay. Let's see, where else do we have any? Over here. This is not the retracement one, but this is a regular order block. All right, broke structure. Came back in here, tapped in here, entry, cash it down move. As long as we don't close out of the order block on the 1 hour, the order block is still valid. Okay. The only time it gets doesn't qualify as an order block is when we close out of it on the hourly. Or if it's too late to even just enter a trade. That's when I don't enter my order blocks. But looks like this was another order block that also caused this move right here. The move that caused a strong trend change. See, we're in an uptrend, didn't switch downward until over here. Huge downward move, shows us a very valid order block. Tapped in here, strong move down, the same hourly candle. Would have been a beautiful play. I'm not sure if that was one I caught already, but yeah. Dude, I can't find these retracement order blocks anywhere. Where do we have a retracement order block? This is kind of a retracement order block, but it looks like a very slow trade. Right here. This is a retracement order block. Essentially, anywhere you see a retracement in the original trend, that is considered a retracement order block. If I don't have any order blocks in play, that's when I look to taking a retracement order block. But ideally, I want to take off an order block, a regular order block, because that gives me the best setups. So high is the green candle to the black candle, right? Green and then black. This is the highest point. I don't care if this point went higher. I only care about green and then black. Green and then black, that's the high point. Black and then green, that's my low point. Mark the high and the low point. That's the retracement order block. Tapped in here. Entry. Cash a small move back up. Done. See if we can find one more. I want to find a good one for you guys. This is kind of a retracement order block, but I think we probably had news this day. That's why it was like really volatile. But see, we're in an uptrend right here. We broke back down, but we broke back up with this candle. See, we broke structure right here. Okay. Broke back up. So we're bullish. We have this retracement, massive retracement order block over here. That's fine if it's huge. That's totally fine. As long as it follows the principles of an order block, that's all that matters to make it valid. Follows the principles, broke out really strong. This is our order block, retracement order block. This is what I do to mark it, like this. So if you see this on the chart, that means it's a retracement order block. Broke out, tap back in here, entry down here, catch the leg up, continuation, done. Okay, there we go. And here's an example of a failed one right here. In a downtrend, broke out really strong. This is an order block, a regular order block. Broke out, but didn't get respected. So yeah, that's pretty much my order block strategy. Let me think if there's anything I need to add. Yeah, we only take it on the hourly time frame. Formed after a trend switch. The regular order blocks are formed after the trend switch. Right, we went over it. Trend switch. Want to retrace them back into it for our entry, and then we take an entry in here from our other confluences that we'll go over in another video. But yeah, it's pretty simple. It's not, it might be pretty difficult trying to figure it out on the charts, like where it is, but I just try to identify them as much as you can. Like go on the hourly time frame. If you want, you can go on the 15-minute. I'm pretty sure there's order blocks on every time frame. You can find one on literally any time frame. Here, broke out. Most recent low to the highest point. Broke out really strong. Tap back in. Continuation. Like on any time frame, you can find these. Like the most weirdest looking order blocks still work. It's all about the concept. Broke out. Tap back in here. Cash entry down here. Ride the wave up. Done. Just pair this up with your other confluences. You can use my confluences, your confluences. The point is that order blocks are a very useful component in finding direction and catching continuations or reversals. Okay, the retracement ones are helpful for catching continuations. The regular order blocks are good for catching the continuation in the opposite trend right after the trend switch. Okay, but yeah, I use them on the hourly time frame. Pair them up with my bias, my entry confluences, and it helps me catch winning trades, and I have a high probability win rate with them. So yeah, I'll catch you guys in the next video.